What was your first reaction to this report?
They missed on cloud, so the growth rate went from 35 to 30, and everyone is expecting AI to help accelerate cloud. We heard from Microsoft, they missed their non-core AI workloads as well. So what's going on? Two of the big three are missing cloud numbers. So that's the first thing. So all eyes will turn to Amazon now. Did they take share? Or are they going to see a decel in cloud? And then I go back to just making the numbers, right? Mm-hmm. This is not a big beat. As you know, Alphabet doesn't guide. They don't give us anything. We're flying in the dark as analysts. So they don't give us any guide, so we're all having to guess. And yeah, I think that's a bigger problem we can talk about.
Yeah.
But YouTube and core search, 1% to 2% ahead, nothing exciting. Cloud was 2% light. And then you have capex a little bit higher, 14.28 versus our 14.23. So, again, it was a ho-hum, not super exciting. It should have been more exciting given kind of some of the tailwinds, given it's a Q4. And again, they don't guide, so we're all going to be guessing. They don't really give you any color on the call. It's probably one of the worst calls for any color of any tech company we cover. Mm-hmm. So they're unfortunately not going to help anyone on what they see in the pipeline for Q1.
Well, what is that?
Overall, not great.
Well, what does this mean, though? Because, we talk about, at least in past quarters, some of the catch-up that Google was doing with regards to cloud, trying to catch up with, obviously, the behemoth, Amazon, and to a certain extent, Microsoft. In your view, without necessarily knowing what the company's internal guidance is this progress interrupted, or is this progress basically just stalled?
Probably stalled. I'd say they're considered kind of the third call in cloud. Right, you have Amazon number one, 50+% market share. Microsoft with their hybrid approach has a tremendous opportunity and is actually, if you put it in perspective, Microsoft is growing at the same rate, if not faster, in their Azure business, which is their cloud business, as Google, and they're multiple times bigger, right? So this, to me, demonstrates that, again, Microsoft is taking market share. When you look at the growth rate at their size, is incredible that they're growing at that rate. Mm-hmm. And the street was disappointed. They didn't show bigger acceleration for Microsoft. So what I think you're seeing is two of the three big hyperscalers are now disappointed on cloud. What's Amazon going to say later this week?
Yeah, and it's notable that Amazon shares are lower in after-hours trading following these results from Alphabet. The other thing, of course, that we want to point to is the capex forecast, $75 billion for this year. Caroline Hyde was just on saying that estimates for how much it would spend were kind of all over the map. There's one consensus estimate of about $58 billion, so this is huge, huge spike above what was anticipated on that front. Where do you sit in terms of how much it's spending and what it's shown? What kind of results it's shown for that kind of spending?
We're in a capex war. We're at the beginning of the AI cycle. No one is lowering capex. Everyone's raising. Right? Meta raised capex by 10. Microsoft grew capex 97%, but said that would start to slow next year to 10 to 15. Everyone's capex numbers are going bonkers, right? And it's the right thing to do in front of what is ahead of us, that we're in the earliest innings of AI. Mm-hmm. And so you're seeing, again, an ongoing capex war. You're going to continue to see good growth this year. I think most are saying, hey, we haven't seen peak numbers, but the absolute growth will start to slow as they have to show an ROI. One tech investor said these companies are starting to look like railroad companies. The amount of money they're having to put out.
What is the number one thing that you think they will disclose in the earnings call that might be helpful to you?
I think most of the companies are discussing, hey, how early it is in AI, but what these investments are paying off. What are they seeing in terms of transactions, in terms of excitement around the platform, bigger deals in cloud. Clearly, I think their advertising business is in good shape. I mean, YouTube and search were a little bit ahead, right? The things that kind of worry you are the capex massively and the cloud business, right? And so the cloud business is still a rounding error. It's tiny. It's not the main driver here. So the good news is the flagship business, which is YouTube and search, doing fine. I think just the magnitude of upside wasn't as big as everyone wanted, and that was somewhat disappointing. But this stock is super cheap, 12, 13 times EBITDA, and we still think there's a really bright future. They have more AI behind the hood than they let you understand, and our sources suggest they're gonna roll stuff out from the seventh floor of the basement out that will continue to surprise us and delight us as consumers. So we're still positive on the overall position and where they're going. But yeah, I mean, a slight blemish on capex and cloud is again, I think the smaller pieces of the business when you look at the impact, the flagship business a little bit better.